Jamaica, so I've been frequent in Jamaica. I run a firm called IFS Securities, and I can tell you that I view myself as an entrepreneur, traditional businessman. I mean, I got into the business about 23 years ago, and I was fortunate to just take a shot at the business. I saw a movie when I was a little kid called Trading Places, and it just captivated my attention. No one in my family at the time had any finance background or even ran a business that was notable, but I can tell you that as a kid I was easily influenced by just business owners, and I would look at their swag, I would look at their how they ran their business, and I said to myself, I want that. And as a young man with a kid at a very early age, it instilled a sense of responsibility that I was able to use that as a driving force and say I have to feed my family more than anything else. And I'm first generation U.S. My family are Panamanian. I have my wife here as well, and Angela Avery, who's part of the banking team. So I can tell you that I used more so my work ethic to build IFS Securities. I didn't want to take on external capital because I wanted to risk my money. And I see that as an issue that a lot of businesses unfortunately fall victim early on, and they dilute themselves and they realize they can't run a business the way they truly want to have that independence. And because of that, they tend to fail because they're not passionate. So I was fortunate to take our time and build it one Lego piece. At this point, we're a 140-man outfit. We control and run about $1.3 billion. We have about 20 offices throughout the country, and we've done it all organically. We're at the point now where we're starting looking at some acquisitions where we can start to play at a much larger scale. But I can tell you, although we have, as Kurt mentioned, the title of the largest minority firm in the country, but it's in the retail space. There are firms that probably one or two that are bigger just in general, but the reason we're probably the largest as a retail is you just don't have too many African Americans running money in the US. Fortunately for me, when I got into the business 20-some odd years ago, I built my business over the phone, so I could be whoever I wanted over the phone. I could just remove all barriers and just be Alex McKenzie, sitting next to the guy. I'm gonna learn exactly what he does, and I'm just gonna outwork. And that's what I use. I work 13, 14 hours a day for years. So when the opportunity presented itself early in my career to be a partner of a firm, I had my equity. Okay, I didn't have to borrow from a bank. I was able to invest. And all I said was, what do I need to do? They said, we need you to work to create this amount in business, and we need you to lead by an example. And because my money wasn't aligned, I can assure you, I made sure it was protected. Early on, from that point, again, raised by women. My father moved out when I was young. I was in Pampers. So unfortunately, it was a gift and a curse. That transaction didn't work out. Not because the business did not. The business is still around in existence. But I wasn't savvy enough to dot my I's and cross my T's. I learned that very early. So I said, if I'm gonna do this again, and I had a conversation with one of my clients who was out in Australia, did a lot of international business at the time, and he said, Alex, you're a kid. I said, no, but my world is ending. I'm not used to this kind of money. I've gained this type of stature, and it all got yanked in one day because just not being savvy enough to slow down and not be so trustworthy. However, I used that, and I said, if I can work hard for these guys, I can work twice as hard for myself. Started IFS Securities about 10 years ago. I'm originally from New York, and just built, like I said, one Lego set at a time. So I'm very proud of what we've accomplished, and I think that, the reason why I've been traveling to Jamaica in the past year, ushered with a good friend, David Compton, who's very well respected and one of the most impressive guys I know. We at IFS Securities, because we're not owned by a external company and 100% employee owned, we can pick and choose who we want as clients without any external influence. And with that being the case, we've managed to create a name for ourselves that we have the ability to get difficult deals placed. So typically when people are running out of the, as one of my bankers say, out of an institution, we're running in and we're saying, look, you know, we can help. Why? Because we have to show that, I mean, A, they need help. The competition is scarce, but more importantly, we can do it. We have the technical background, we have the experience, we have the relationships to get it done. And we managed to help major cities like Compton, like Scranton, Pennsylvania, Virgin Islands, which is recently downgraded. But the point of the matter is, as a firm, you know, we're doing some things that that most firms our size and that reflect us can't do. So that's just a quick overall on IFS Securities. I'd like to bring up Chris and Derek, who are in the fintech space and IT, and I think, you know, we'll together just jump into a quick open discussion.
For being fintech. Thank you very much. Pleased to be here. Really a very interesting story from Alex, and very inspirational, and really points to a couple of things, which is hard work. And the other thing that's really important is innovation. And I think Alex didn't specifically point it out, but he's been successful because he's looked at some existing things and took some innovation to it. So what I'd like to start off with is just a quick video, just to put you all on the right frame of mind and be able to think with our, you know, high tech, right? Just be able to think on our topic, which is future-proofing, and what innovation means for that. But more importantly, if we go back to the history of man, innovation has been the greatest driver of prosperity that there's been in this world, and will continue to be. Now,
Yes, we are.
are you in?
Yes.
Okay, good. I'd like to turn it over now to David to be able to start off our panel.
Good afternoon. As I mentioned earlier this morning, I spend a lot of time with financial institutions in the United States, and I'm trying to get the CEOs of these financial institutions to think about how they think. And one of the biggest challenges that we have is that financial institutions, perhaps much like other businesses, but particularly financial institutions, are very grounded in tradition about what they are about, what is their business. And so as we start thinking about things such as in the United States, about 80% of the deposits in all financial institutions are held by baby boomers and super seniors. And only about 20% of the deposits are held by millennials and the Gen Zs that are following them. And yet already we have seen the millennials pass baby boomers in the United States in both the US workforce and as human beings on the planet. So financial institutions in the US have about 8 years, just 8 years, for that number to flip, where all of a sudden they're going to see a significant amount of their deposits are going to be held by millennials. The problem is that millennials do not want to bank like their parents and their grandparents did. So what are these financial institutions doing right now to start taking the steps to crawl, walk, run their way to be in the position to be a financial institution to which a millennial or Gen X would even be interested in talking to within that 8 years' time? And that's the important point, is that it doesn't matter what business that you're in, your customers and the access of global markets is changing so rapidly that you must right now think about where you need your business to be in 5 years or 8 years or 12 years, and start immediately now taking those steps in order to be in a position to capitalize on those markets when they get there. And I think that's true for financial services in the United States, and I believe it to be true for financial services throughout the Caribbean as well. Thank you.
So let me continue on along that path of technology, and there's really, when we talk about future-proofing, what are the things you need to be aware of? What are the things that are coming up that you need to prepare for? And there are a lot. There's going to be a lot of changes, but I'm going to talk about two things in particular real quickly, and then we'll open some of this up. One is there's new technology out here, so a lot of people might have heard the buzzword of blockchain. So blockchain technology, just to put it really simply, it's a new kind of database, it's a new way of storing data that is very secure and uses math as the security. This is going to be a game changer for a lot of different areas. Today, the main use that's out in the market is cryptocurrencies. If you've heard of Bitcoin or some of the other similar ones, that's the main use, but you're going to see as this year progresses and the next couple of years, many uses. I'm just going to point out a few quick ones. The things that we heard about today. For instance, in the medical profession, if you put all your medical history from when you were born, for every pill that you took, every injury you've had, every x-ray that's been taken, every doctor you've seen, you put it in the blockchain and you have that as your personal medical record. When you go to see a new doctor, you can give them permission to see that. They can see your whole history. You could even add your family's history. You know, my mother suffered from this, my father passed away from that, my grandfather, and be able to give you better health care. Not only that, if any of you have gone to a new doctor, what a hassle it is to try to get your records to the new doctor, right? This can easily go away. It's one example. Another example could be when you're talking about your car, right? So not only from the record of when you buy your car and what that history might have been if it's a used car before, but every trip you take, every time you buy gas, everything that you do with that car will be part of that blockchain. Your house, the same thing. We heard earlier about the issue here in Jamaica because of land titles. Well, if land titles are in the blockchain because of the security, it can't be changed. There's been situations in other countries where a new government came in and decided that, you know, you don't have a good title to your land, and I'm giving it to my politician friend or family of a friend. These things will not be possible in the use of blockchain. And then the second thing that I want to talk about tags right onto that, which is cryptocurrency. And just for full disclosure, I own no cryptocurrency, I endorse no cryptocurrency, and my real view on it is that a cryptocurrency done the right way, and I don't see one out there yet, can be a global trade currency. So today, the US dollar is 80% of global trade. It's by far too much for any one currency to be. The next major currencies, yen, renminbi, pound, and euro are only 2 or 3% each. There's a good opportunity for another currency to fit into that space to facilitate and make cheaper, easier, faster transactions with trade. And if you know and follow trade, that's what drives this world. That's what took us out of the Great Recession. Should I call it great? I probably shouldn't call it great, right? It wasn't really great for any of us, but that's what took us out, was global trade. So if you can make that easier, and more importantly, part of my passion is with SMEs, small and medium-sized enterprises. If you can give them an easier way and a cheaper way to pay, then you've got something that can really help move their business. So on the other side of it, though, one of the areas that I think a lot of people don't talk about is what's the benefit to the banks or to the governments, right? So for the government, one of the things very easily, it could be potentially a huge cost savings. You're no longer printing money, distributing money, having to collect old money. You don't have to worry about counterfeiting, these kind of things. But there's a more important thing I think that is involved there, is that when you have a cryptocurrency, you have the opportunity to start reducing crime. And what I mean by that is today, being anonymous and physical currency are the left and right hand of criminals. The fact that they can use and move physical currencies, dollars, pounds, whatever it is, without being seen drives their business. If you start taking physical currency out of the system and you replace it with a virtual currency that is in your servers, in your database, where it's trackable, where you can see every transaction that that value has done, you will be able to see, has that currency been used for something illegal or not illegal? You will take a lot of that out of the criminals. And as we all know, they hurt all of us, they hurt all of our economies. I mean, somebody just goes into a store and steals a jacket like this, we all pay more for clothes. So these are the kind of things that I think that we need to start, and it's early on. We need to start learning, we need to start looking at it, and we need to start pushing the governments and the banks to be able to allow us the availability of regulated cryptocurrencies that can replace the physical currencies. And now I'll turn it over to my colleague, Alex.
Hello? Okay. Well, I can tell you from my perspective as a business owner, in regards to financing internationally, what limits a firm like IFS is regulation, and the equalizer is technology. So we rely on people like Chris and Derek to create software that enables us to identify international money, but also to verify the origin. I mean, in our business, it's very punitive, and I can tell you that policy will determine if we decide to do more international business or if we just stay domestically. So that's kind of like the tie thing between, you know, the global finance from our perspective and individuals like Chris and Derek.
You know, I find it interesting. When I talk to a CEO, I want to talk to them about innovation. I want to talk to them about technology. Maybe we have a conversation about blockchain and Bitcoin. And the CEOs of most financial institutions in the United States, they don't know anything about tech. They're not technology people. They didn't come up through operations. They're lenders, right? And so their eyes kind of glaze over and they start to think about playing golf and they don't pay attention. So what I have to do is try and get back to what they know, right? And so they care about lending. So let's talk just for a moment about this idea of what a financial institution's role is in lending money. And you start looking at these kinds of issues where somebody today in the United States can basically go out and decide that they have a cause and put it out on a crowdsourced system that basically allows anybody who might have an interest in making a donation or being a part of funding that. And all of a sudden you're seeing these people who would never qualify for traditional credit, all of a sudden getting $5,000 to start a small business, or $20,000. There's crazy stories about a guy who went out on crowdfunding looking for a $200 donation to make a big bowl of potato salad for his church picnic, and he raised $2,500, right, for potato salad. So now all of a sudden, what does that mean for a financial institution? Will they be disintermediated completely in the process of extending credit? So the thinking, here's how we have to change our thinking. Would a financial institution provide its own crowdfunding? Would it actually take the angel investors? Would it take the people who already bank as a part of that institution, who are a part of the economy that already have money? And over here we have these individuals who are customers of the bank, who are trying to start a small business, but maybe they don't qualify for traditional credit, and they put together their own crowdfunding, their own crowdsourcing opportunities, letting these individuals make pitches to their angel investors with the financial institution as the economic catalyst. That's an idea where financial institutions have to think differently about what their role is in the economy. And again, that works here in Jamaica, it works anywhere throughout the Eastern Caribbean, because the bank can become the way to sort of enzyme those relationships together.
You know, and I think it's really interesting. I mean, one of the issues that Alex has identified is access to capital. Crowdfunding, it's at its early stages. It's certainly a good example of how that can be done on a massive scale without having to have some of the things that you need in place traditionally to raise money. But we can look at that also innovatively. We can flip that the other way around. You know, we had a very interesting presentation, right, from the power, the public, the power company here.
JPS.
Right, so I saw a very interesting model that's used by a company in South Africa that they go out and put solar panels on schools to lower their energy costs, and then they use a reverse crowdfunding model for people to come in and actually own a section of those panels, and the excess energy that's generated from those panels that the school doesn't need gets sold into the grid, and those investors in a reverse funding model can gain some return on their investment into that panel. And I think that that's something that can be looked at from a lot of industries. But you know, again, it's, you know, how can we flip the model a few different ways?
Yeah, so, you know, he's talking about crowdfunding. So crowdfunding was legislation from the Jobs Act. And what issues we have in the States is such a strong regulatory environment that's litigious. So a firm like IFS Securities, you know, we tend to limit our investor base to accredited investors. So it pretty much just removes an entire segment of money. But with fintech and robo-advisors and these other technologies that are coming out, it'll help the average individual access these opportunities. And in particular, I know that there's a desire for Jamaica to connect with this diaspora. And I think, you know, utilizing fintech is perhaps the only way to achieve that. You know, if you know, it's kind of like fundraising. You know, you fundraising using social media, and the combination of you know, the marketability of that technology and the low cost of it is why it's successful. So I think it's important to and because of fintech type products is the reason why an IFS Securities can exist. And I could not have pulled this off, call it, if I started 25 years ago. It was very limited to bigger banks. So I think you have a combination of regulatory, which is putting pressure on the industry, and the industry in the US in terms of broker dealers is shrinking. When I came into the industry about 20 years ago, we had about 550, some odd hundred firms, and we're down to 4,000, and it's increasingly decreasing, so to speak. And I just think that it's important for firms and to utilize and embrace fintech. And I think as we grow as a firm and continue to hit critical mass, we'll continue to lean on, you know, companies like within the fintech space to allow us to integrate and plug in more in services, because at this point it's economies of scale. You have to increase your top line. I mean, if you look at the environment in the US, if you look at the treasuries, you have the 10-year trading 2.5%, you have the 5-year trading a little under 2%, you have the 30-year trading probably about 3%, and it's increasing dramatically. You have China pulling money out of the treasuries, or a net seller, and that's going to continue to increase the cost of capital. And that capital means that businesses are going to have a hard time funding, and at the end of the day, you need fintech to come in and fill that void. You know, we had, as interest rates decreased, and you had the regulation like Sarbanes-Oxley, you had a ton of business development companies come out in the past 4 or 5 years, kind of filling the gap of traditional banks that decided not to lend conventional. You know, they've actually were more of a net carry, taking advantage of the low dollar and just playing a portfolio. But as of late, and especially right after the election in December, you had probably the largest pull of about $95 billion came out of treasuries, and the majority of that was China. So.
Well, the financial services is so integrated in all of commerce that it's kind of like breathing. We don't really think about it as much. But earlier today, Minister Shaw talked about that medical marijuana would be a potential way that a product and service that Jamaica could be integral in. And why not? And if we look at the United States, and you look at states like Colorado and Washington, Oregon, and now California, they've had medical marijuana and recreational marijuana, right, for a while. Unintended consequences are that federal law does not allow for those kinds of transactions to run through the banking system. So if you run a dispensary in the state of Colorado, you wind up collecting a lot of cash. And that cash is actually sitting in vaults because they can't take it to a bank and go deposit it. Another unintended consequence, a plumber comes and works on the faucet at the dispensary, drain is clogged up. So he does the work. What do they pay him with? Cash. They have a lot of cash. So now he has cash tainted with ganja. He goes to the bank and makes his deposit, and guess what? His account, the plumber's account, is now flagged as a marijuana-related business. He can no longer do banking. It's a huge problem. So as we think about the forward, this idea of where does fintech come in? There's a company in Arizona now that's creating an infrastructure that actually allows for the cash that comes into the medical marijuana dispensary to go into an ATM-like device. It literally is deposited in a device and is accounted for, and then is picked up by a courier service and taken directly to the Federal Reserve and is destroyed. So that money never goes through the actual banking system to be passed on to somebody else. So we have to think about this from the standpoint of what are the opportunities that are there, and then how can we think differently about what ways we can actually enable commerce to occur and set aside some of the social issues related to something like marijuana, whether you're for or against it, and come up with the economic way that we can actually make something like that work, whether it's in Colorado or whether it's here in Kingston.
So to wrap up, we've talked about a bunch of different things that will happen in the future, some of the things that are impacting both domestic and global finance, some of the things that are interesting in fintech. So we leave the question to you in the audience now. What are you doing to future-proof your business? What are the new things that you're going to go out there and learn and be able to bring to your business? Thank you very much.
Awesome stuff. All right, guys, we're going to take, I want to say a 7-minute break. 7-minute break, please. So it's not going to be long. Just